Good afternoon, everyone. Good afternoon, everyone. On behalf of India International Exchange IFSC Limited, a BSc Group subsidiary and India's first international exchange, I welcome you all today. As we all know that World Investor Week 2024 is being celebrated under the aegis of IOSCO, SEBI and IFSCA. India INX is delighted to collaborate with Microfinance Industry Network for this webinar on international capital market opportunities in GIFT IFSC. The idea and motivation behind organizing this webinar with MFIN on the occasion of World Investor Week is to bring more awareness about the GIFT capital market structure, issue and listing of securities, direct listing in GIFT IFSC, fundraising opportunities through GIFT IFSC for the microfinance sector. We would request everyone to please use the chat box to share your queries, and our experts would answer them as the session proceeds. So without taking much time, we would begin the today's session. We have with us Shri Alok Mishra, CEO and Director, Microfinance Industry Network. Good afternoon, Alok sir. Alok sir, can you hear us?
You can hear me now?
Yes, sir, we can hear you now, but your camera is off.
No, camera is on.
We can't see you, sir, actually.
I told you earlier also, but my camera is on. Finisu, I think we can get going. As long as I'm audible, that should be fine.
Okay, sir. So we have with us Mr. Alok Mishra. Dr. Mishra comes with a rich professional experience of more than 3 decades in the international development, rural finance, microfinance, inclusive finance, and research at both policy and implementation level. He started his career with India's Apex Rural Development Bank, NABARD, and has been part of the multi-institutional task forces responsible for setting up India's first online demutualized commodities exchange, which is NCDX. He has also served as a board member of MFIN via FinServe and a member of NABARD's strategic group on microfinance. He is a member of Inclusive Finance India Group of Advisors, a member of Digital Finance Working Group constituted by ITU Geneva. He has worked across 24 countries in Asia, Africa, Europe, and Pacific, and has written numerous articles and reports and has authored Inclusive Finance India reports for 2 years. So without taking much time, I would like to welcome Alok sir, and over to you.
Well, thank you, and a very good afternoon to all of you. So we at MFIN, being the industry body as also the first self-regulatory organization in India, are thankful to both India International Exchange as well as IFSCA for jointly hosting this webinar on the Investor Week event. Now, let me, I would, because I will leave the technical details of the Gift City route and all that, that what are the channels available to get international capital through the Gift City route to the experts who will talk later. I would only briefly, because I guess investors are also there, our MFI partners are also there. I would only try to tell you that few things about the sector and also what are the requirements of the capital are. So the sector at present is the typical size of the sector as we speak today in terms of portfolio outstanding is somewhere around 45 billion US dollars. And we expect the market size to be, because the penetration is only 32%, our projected market size is somewhere around, you can say 140 US dollar billions or something. So we are at 35% projection, a long way to go. And the sector serves around 8 crore unique borrowers across the India. And it is a very important vehicle of fueling the inclusive growth of the country, because while we may have GDP growth of 7%, 8%, but if we are not taking along the masses which are left away from the mainstream, then the growth will not be inclusive, and that is the role of the sector. Now, to how to achieve that, because we provide financial services, all our members are regulated entities of Reserve Bank of India, be it NBFC, MFIs, small finance banks, or universal banks, all regulated, well-regulated entities of the Reserve Bank of India. And everybody has a capital requirement, because to grow, either you require equity or debt, though the banks, both the SFBs and the universal banks, also rely on public deposits, so their reliance on such international and global and domestic borrowings is less. They are more funded by retail deposits. It is the NBFC, MFI and NBFC sector which is in need of international capital as well as domestic capital. Now, traditionally, the sector has been attracting two types of capital sources from outside. One is the equity investments. Of course, for requirement of equity, major part of equity comes from international investors. And second is the ECB route for debt funding. But while the ECB route is profitable on quite a few fronts for the NBFC MFI sector, the tenure is of a longer duration than the debt borrowing, wholesale debt from the Indian banks. Second, it allows, the rates are also very competitive. It allows for geographical diversification. If you have ECBs, it also establishes your credibility much higher. But the ECB route has not been very popular among middle player and small players. Few large players basically typically take care of the ECB. And that we need to promote because of the various reasons which I said. The equity also, while in case of equity, the Government of India regulations and the Reserve Bank regulations allow for 100% FDI in the NBFC space. Only you have to take RBI approval if the controlling stakes goes beyond 26%. So it is encouraged, and many funders have invested in Indian microfinance market. But still, the involvement of the international players in the ECB route, where I am told that up to $750 million dollars per year ECB is in the automatic route from the Government of India, that is hardly used and used only by large players. That is one thing which we must talk about. How can GIFT City help through us? How can we build investor confidence so that more money comes in? And because the investor money, I agree, also depends on sector stability and profitability, and that is why we can give confidence that based on 15-20 years track record, the cross-cyclical return on asset and cross-cyclical return on equity, both parameters have been quite comparable with the best in the financial sector asset class. So this is an opportunity for international investors to get into market where the returns are also there, and it is a win-win formula because you're also doing a social impact sort of a business, helping the growth of inclusive finance in India. I hope my other two panelists, Mr. Vijay Krishnamurthy from India International Exchange and Mr. Arjun Prasad from IFSCA, which is a unified regulator of the GIFT City, will throw more light on both the structures, both the equity and the ECB route, which the microfinance NBFCs and NBFC MFIs can get through GIFT City, and what are the advantages of getting it through GIFT City rather than the normal route. And also the investors, if they are there, if they have any questions on the sector, they can also ask. I am there to answer that on my part. Once again, I thank all the participants as well as India International Exchange and IFSCA for having this webinar. Thank you, and I will stop here.
Thank you so much, Alok sir, for your kind words. And in case we have any questions, we will be having it through chat box, and we'll ask you definitely if there is any question there. So moving ahead, we have with us Shri Vijay Krishnamurthy, Interim CEO, India INX. With rich and varied experience of over 20 years in investment research and products across asset classes, with an expertise in the fixed income market, Shri Krishnamurthy has worked closely with regulators and institutional clients for the development of capital markets in India. Prior to being designated as the interim CEO of India INX, Mr. Krishnamurthy was heading the entire debt segment at the BSE Limited. Shri Krishnamurthy has been instrumental in leading the development and implementation of Request for Quote RFQ platform, security level valuations, debt and hybrid indices for the Indian markets. His active participation and contribution in several SEBI committees, subcommittees, working group has helped in shaping up some of the policies for debt market and indices. So without taking time, over to you, Vijay sir.
Thank you, Priyanka. Good afternoon, everyone, and thank you so much for joining this World Investor Week. Which is an initiative that is worldwide done by ISCO, and of course, IFSCA has been taking the lead here in the IFSC space. We keep it's a very it's a very unique week wherein there's a lot of focus that is and emphasis that is done on educating the investors or educating the market participants in the entire ecosystem of what's really happening within GIFT IFSC. So we keep doing this at periodic intervals, but this is a very focused week and it's a very great initiative. I would also like to welcome my fellow speakers, Dr. Alok Mishra ji. Sir, your overview of this industry and pointing out some of the asks has been very enlightening and very useful. So I'll definitely touch upon some of those aspects and also thank Shri Arjun Prasad ji from IFSCA for joining us today. Without much ado, what I will do is I'll take you all through some of the initiatives that has been happening at GIFT IFSC, as well as some of the things that we bring onto the table as India INX and exchange at IFSC. So with respect to some of the things that Dr. Alok Mishra pointed out, saying that how can the MFIs, the NBFC MFIs raise capital on the in the GIFT IFSC. So just to highlight, we have been having a good amount of debt issuances which has been happening at GIFT IFSC, and especially India INX has been at the forefront of this with nearly 100% market share since its inception. So the best part about this is there is no particular lower or upper cap for somebody to come and raise capital. Right, we have seen capital being raised as low as about $1 million USD to as high as $1 billion USD. So the good part, or what I want to highlight, is the size really does not matter. If there is a need for somebody to really come and raise debt capital with whatever size they have, can definitely come onto this through this route and raise the capital. What are some of the advantages that one would have while coming here for raising the debt? It would largely be one is of course there are no kind of taxations which are there. That's number one. Number two is also whether it is jurisdictions which is apart from India or jurisdictions like Singapore or somewhere. And even the domestic, the IFSC has definitely better cost advantages, and the operational efficiencies are very high. There's a clear benefit of a withholding tax of 9%. That makes it a little bit much more cost efficient in that sense. IFSC has actually rewritten all the regulations and ensured that the regulations are very friendly towards the market. They are all very light touch regulations, and whatever are those excesses have been currently done away with. So definitely it's an area where the MFIs could really look at coming and raising the capital or funds to the debt route. Also with respect to the equity, Government of India notified somewhere in January 2024 with respect to the allowance of direct listing by making amendments to the Companies Act as well as to the FEMA and Act and FEMA regulations. Very happy to state that 29th August, IFSCA has come out with their guidelines and their set of regulations for listing of unlisted Indian companies as well as foreign companies on IFSC. So these regulations are out on August 29. So that also gives another route for the MFIs to come onto this platform to raise capital through the equity. So it's a very good platform wherein you will have the width of the investors are larger. You will have foreign participants coming in. Participants registered at IFSC can also participate in the process of capital raising. The other aspect that I also wanted to touch upon is, apart from the debt and the usual debt, we can also do it through the green bonds or the sustainable bond or the sustainability linked bonds, wherein IFSC has really provided a lot of incentives and innovation in terms of raising their bonds, raising such bonds here, raising capital through such bonds here. So that's also another thought process, which I thought I should leave behind in case there is that could be interest to raise such bonds. In a nutshell, I would just leave this thought that GIFT IFSC is a very future looking jurisdiction wherein the regulators are very proactive. They are more outside in approach, wherein they are very consultative in their approach. The current regulations are extremely light touch. The government has created a lot of tax incentives for the growth of this segment, and various other initiatives and incentives are keeping on being developed in IFSC by the regulator as well as by the government. So it's all in all a very positive thing to happen, and would urge that all of the MFIs or the NBFC MFIs could come and really explore GIFT IFSC. And what I would like to leave behind is my team at India INX is extremely well versed with the rules, regulations of the listing thing, because we carry a lot of expertise from the domestic market as well, and we are extremely well versed with all the rules, regulations, guidelines that is needed. So my team here can handhold, can do presentations, do webinars to whoever needs it or whoever is interested, and we'll be really very happy to take it up. With this, I would leave Shri Arjun Prasad ji to take over and take the technical aspects in this session. Yeah, thank you so much.
Thank you so much, Vijay sir. As we move forward in the session to share the regulatory insights on today's topic, international capital market opportunities in GIFT IFSC, we have with us Shri Arjun Prasad, General Manager at International Financial Services Centers Authority, IFSCA, from the GIFT City. Shri Prasad is in charge of the division dealing with primary markets at IFSCA. During the last 4 years with IFSCA, he has been involved in policy making in several areas in the capital markets, including listing regulations and capital market intermediaries regulations. Prior to joining IFSCA, Mr. Arjun Prasad has experience of over 12 years in the capital market with Securities and Exchange Board of India, and has handled various portfolios including investigations, international affairs, takeovers, buybacks, and delisting. Arjun sir, welcome, and can we have you on? Yeah. Good afternoon, Arjun sir.
Thanks, Priyanka. Thanks, Vijay ji. Thanks, Dr. Alok Mishra. And I would like to thank India INX and MFIN for organizing this webinar as part of ISCO World Investor Week. So what I will do, I'm having a presentation. So I will give a brief overview about GIFT City, about IFSCA, and probably a detailed presentation on our new listing regulations, which Vijay touched upon. So let me share the presentation slides before I start. So I hope it is visible. Slides.
Getting up.
Is it visible now?
Yes.
Yeah.
Yes, sir.
So how much time I have for the presentation, and then we can have Q&A, because I would like to leave some time for the question and answers and discussion.
Sir, we have kept half an hour for your presentation and session, and then we can have question answers.
Yeah. So starting with the concept of GIFT City, it started way back in 2007-8. So the name is Gujarat International Finance Tech City. So it has two areas. One is the domestic tariff area, and the other is the multi-service specific economic zone. So our IFSC is part of the SEZ, which is Special Economic Zone, and IFSC has been set up in 2015. So we have a new greenfield city, and IFSC is one part of the entire GIFT City. So again, SEZ being an SEZ, there are two kinds of services. One is the normal multi-services SEZ, which can be carried out from the zone. The other is those entities who are into financial services. So those are regulated by us, and normally we call it as IFSC unit. So those, mostly the entities present here are IFSC unit. And as we speak, we have close to 600, 650 entities present in SEZ. So the first question which comes to mind is why there is a need to have a special IFSC in India. So the to my mind, there are 3 or 4 large objectives which IFSC can serve. So the first thing which comes into mind is what we call is onshoring the offshore. So there are various kinds of services where India-oriented services are being provided by various jurisdictions in different parts of the world. For example, fund management. Prior to IFSC, if you see, currently also, if you see, there are large investments coming into India through various centers, example, Cayman Islands, Mauritius, Singapore, Dublin. So there are various centers which are actually pooling in money into India. Can we have our own center where the funds are being pooled into the IFSC, and those investments are making into India in the form of FDI and FPI investments? So now there is, in fact, there is no need for the funds to set up in outside of India. They can set up in GIFT City, which is treated as a financial center outside of India in terms of FEMA, and they can pool foreign money and get investment in India. So fund and management is one example. We have various other examples where India-oriented business are being done from various parts of the world. The second example is the Nifty futures, which was being traded on Singapore Exchange, but after setting up of IFSC, it has now been relocated to GIFT City, GIFT IFSC. And there are other examples in terms of aircraft leasing, ship leasing. In fact, you'll be surprised to know that Dublin, which is in Ireland, it caters to more than 50% of the aircraft leasing across the world. So even Indian Airlines, they were taking those leasing services from one city, which is Dublin. So why not have our own center where the international services relating to India can take place? So that is the first objective, I mean, onshore the offshore. The second important objective which I would like to highlight is the gateway for inbound and outbound capital relating to India. So we can have various funds which invest through GIFT City into India. And as we all know, India is a very strong in terms of the economy. We're already growing at 7 to 8%. We are the 5th largest economy. Very soon we'll be 3rd largest economy. And considering the strong India growth story, there can be huge capital through GIFT City into India, where GIFT City can play a very big role. The third important objective, which probably I would like to mention, is once we establish this as a center where we have huge amount of capital coming into India, we can become a regional hub in certain services, not just serving to India, but we can serve to the Asian region, to the Middle East region, and probably global hub for some of the identified financial services, for example, maybe fintech or sustainable finance. And the fourth important objective which GIFT City and IFSC can serve is to have stronger global connects, either in the capital markets or in the other areas. For example, our exchanges can have more and more connects with different parts of the world. So I have on the slide mentioned some of the quotes by Honorable Prime Minister for GIFT City. So it clearly says that we want to make GIFT City the global nerve center of new age global financial and tech services. And cutting edge digital infrastructure provides a platform that enables business to increase efficiency and gateway to connect India with global opportunities. So coming to IFSCA, so GIFT City was set up in 2015. So that point of time, it was regulated by domestic sector regulator, that is SEBI, RBI, IRDA, and PFRDA. So after some time, government thought that for any policy change, there's a need of having multiple regulators which are coming into play. For example, if you need a change, because we are we are a foreign, very similar to foreign jurisdiction. For even capital market reforms, you need to engage with SEBI, we need to engage with RBI. So government set up a new regulator, which is a unified regulator, International Financial Services Centers Authority, through an act which was passed in December 2019. And this makes IFSC as a unified regulator for all the financial services here. So financial services, financial products, and financial institutions are present in IFSC. In fact, we have powers of all the 4 sector regulators. So we access powers from 15 central acts, including SEBI Act, Depositories Act, CRA, and 16th, which is IFSC Act. So we are one of the most powerful organizations in terms of the powers which we exercise for regulating the financial markets here. So coming to applicability and understanding the concept of GIFT City, this is very important. So in terms of FEMA, the entities which are present in IFSC, they are treated as offshore non-resident. If there is any capital flow from GIFT City to any other country, there is no restriction in terms of the capital flow. Capital can come and capital can go very, very freely as it is going from any foreign country to a foreign country, which makes it very easier for the foreign investors to participate here, and they have much more flexibility here. In terms of the currency, they can operate only in foreign currency. So Indian INR is not permitted. So we have a list of 15 currencies in our banking regulations. So most of the transactions are in US dollars. In terms of taxation, we are a part of India. So all the carve-outs have been provided under the Income Tax Act. In terms of other law, we are part of India. For example, Companies Act, the entities or the company set up here, they are treated as Indian company under the Companies Act. So what are the unique and distinct features? Most of these I have already covered. So we are a dedicated and unified financial regulator, IFSCA. There are 15 foreign currencies which are permitted. We have attractive tax regime. So there is a tax holiday of 10 out of 15 years for the entities present here. We have full-fledged financial ecosystem, which I'll cover in more detail in the coming slides in terms of banking, capital markets, fund management, insurance present in GIFT City. So being an international center, we benchmark our regulations with ISO principles, Basel norms, IAS norms, and best practices which are in different parts of the world. So we have best-in-class regulatory framework for ease of doing business for the entities present here. We have a strong sovereign support from the government of India, and we also have a strong support from Gujarat state government for GIFT City. So there are some advantages which we have compared to other parts of the world in terms of access to a large hinterland economy and a very strong growth of India, which probably many other centers don't have. The cost of operations are very less in GIFT City compared to maybe Singapore or London or New York. And we have a huge amount of skilled talent pool which is available in our country. So in terms of the regulatory architecture, IFSC has been set up in 2020, October 1st. So in the last 4 years, we have come out with the regulations in various financial services, including banking, capital markets, insurance, and other services like fintech, global treasury centers. So we have come out with various regulations, various frameworks. And in the capital market side, there are mainly 4 regulations. One is the listing regulations, which we came out in 2021, and recently we have revised it in 2024. So I'll cover it in more detail. We have the market infrastructure institutions regulations, which cover the regulatory framework for exchanges, clearing corporations, and depository. We have the capital market intermediaries regulations, which cover all the types of intermediaries in one regulations, which includes brokers, DPs, custodians, all the other intermediaries. And we have a unified regulations for fund management, which covers all the funds, including AIFs, retail funds, and many other types of funds set up here. So very briefly on the business highlights at GIFT City. So in the last 4 years, if you see, there has been a significant progress in terms of the number of entities and the kind of volumes which are there here. So when we started our journey, it was 129 entities, and right now we have close to 700 entities registered with IFSCA. The on the exchanges, it has increased to more than $100 billion monthly volumes. This includes the volumes on both the exchanges, so India INX and NSE. And the banking asset size has crossed $65 billion. This is August data, so this is close to $65 billion we already have crossed. So in terms of fund management, which is very, very successful here, so we have more than 150 funds set up in the last 2 to 3 years, most of the funds, and they manage the total corpus of close to $40 billion. So if you see this slide here, and as Vijayji was mentioning, India INX is the leader in terms of bond listing, and we have close to $60 billion bonds listed already on the exchanges. So some of the names, if you see, we have a mix of entities present from foreign jurisdictions and Indian entities. So if you see banking, we have the likes of HSBC, Standard Chartered, JP Morgan, Citibank, Mizuho Bank, TBS, ANZ, Deutsche Bank, MUFG. So we have banks which are present from US, from European banks, from Japanese banks, from Singapore, from Australia. So most of these banks are present here. So we have close to around 15 foreign banks and close to around 15 Indian banks, so foreign branches of Indian, both PSU banks and private banks. On the fund side, we have, as I mentioned, close to 150 funds set up here. So we have the sovereign wealth funds of Abu Dhabi Investment Authority, they have set up here. And there are many investors which are investing through the funds here. So many sovereign wealth funds, many insurance funds, many other funds which are set up here. And the funds are of various types. We have PE funds, we have VC funds, we have hedge funds which are set up here. So Morgan Stanley is there, Lightrock, Bearing, LGT. So we also have a framework for ancillary service providers. So what they provide the support services to the entities present here. So we have law firms, we have trusteeship firms, we have consultants, and we have other entities. So we have PwC, EY. These are some of the names, Cyril Amachan Mangalas, Apex, Vistra. So there are many fund administrators also present here. So we have a framework for global capability centers, which we call it as global in-house centers. So Bank of America has set up their GIC here. So they have around 14, 15 floors here, more than 2,000 employees here. So they provide services to the entire world. And we have various entities on the fintech side. So we have TechFin and fintech entities. So likes of Wipro are already present, and we'll be soon having Infosys present here as a TechFin entity. And we have entities like ArcelorMittal, Reliance in the ship leasing space, and we have Life in the insurance side. There are other tech-based entities which are in the domestic side of the GIFT City. So this is not regulated by us, but for the sake of information, we have brought out in the slide. So we have IBM, Google, Capgemini, TCS, and other entities present in the domestic side. On the tax front, which is very important to understand. So the entities present here, they have tax holiday of 10 out of 15 years, which means they can select any consecutive 10 years out of the first 15 years where they don't have to pay any tax on the business income. So this is a very big advantages for the entities which are present here. And other than that, as Vijayji was mentioning, if the entities, foreign entities trade on the exchanges, even if they are not present here, those entities will not have any CTT, no STT, no GST, and no capital gains tax on the securities which are listed here. And one of the biggest advantages for the Indian entities, they can raise capital through equity and debt. In case they are choosing the debt route, the bonds which are listed on the exchanges in IFSC, they have withholding tax of only 9% compared to 15 or 20%, which will depend on agreement between India and the different countries under the DTA. So it's a very big advantage, 9% vis-a-vis 15, 9% vis-a-vis 20%. So if you see in the last maybe 2-3 years, most of the Indian corporates, they are choosing only GIFT City for their listing of corporate bonds. We have a competitive tax regime for fund management and different types of funds which are present here. There are some incentives by the Gujarat government in terms of the for the IT and ITS policy. Very briefly on the business verticals. So as I mentioned, we have various foreign banks and various Indian banks. So I think largely I've already mentioned this slide. So they do several services here, so which includes corporate banking, retail banking, trade finance, ECB lending, and the foreign banks, they can also issue offshore derivative instruments, which are P-notes and backed on Indian securities from the GIFT City. So this is a very big enabler for those foreign banks to provide access to foreign investors if they want to invest into Indian securities through these instruments. Funds, if you see the slide from December 21 till now, it has exponentially increased, and right now we have more than 150 funds. There are 3 categories of fund managers which can register here. So what we do, our approach is very, very different from the domestic side of India. So here what we have said is we register the fund manager, and once you are registered here, you can provide different types of services, including whether it is AIF or retail funds or portfolio management or advisory or any other services you want to do from here, which are there in our regulations. So we register the fund manager instead of registering each and every fund. So we have 3 categories. One is retail. So once you take the registration of the retail fund manager, you can provide all the services which are permitted under the fund management regulations. And if you don't want to take the retail and you want to provide services only to large investors, then there is a second category which is registered FME, non-retail. There it is complete. It is slightly light touch compared to the requirement which is there for retail, but they can provide AIFs or portfolio managers, but they should not touch any retail clients in terms of the schemes which they launch. And the third is authorized FME, which is largely for the VC schemes which are there. So we have global investors in terms of RDR, GIC, Temasek, CPPIB, and many other firms. So these are some of the names: Morgan Stanley, Kotak, Bloom Multiples, Kedara, SDFC, DSP, 314 Capital, CX Partners, Mira Asset, Lightrock, and many portfolio managers in terms of AI funds, Nippon Life, Marcellus, Philip Capital, Access, Unifi. Coming to the capital market ecosystem, which is where we'll cover in more detail listing. So we have 2 stock exchanges. One is India INX, and Vijay is present here, MD and CEO of India INX, which is subsidiary of BSE. This is the other exchange, NSE International Exchange, which is subsidiary of NSE. And we have 2 clearing corporations, India International Clearing Corporation and NSE International Clearing Corporation. In terms of depository, unlike India, we have only 1 depository here, and the holding company of the depository, has been formed by a consortium of 5 entities: NSE, BSE, MCX, NSDL, and CDSL. So this depository functions both in the bullion side and the stock market side. We have a third exchange, but it's not into the stock market. It's the India International Bullion Exchange, that is relating to import of gold and into India. And in terms of the intermediaries, we have close to 80 brokers. We have clearing members, we have DPs, investment advisors, investment bankers, custodians. And recently we had a big launch of a credit rating agency, CARE, and they are the first credit rating agency from India, and probably one of the very few from the emerging countries to rate sovereigns. So they have rated sovereign rating of 39 countries, which they have released in the first week of October. These are some of the products which are currently available on the exchanges. We have equity index derivatives, so derivatives on India 50, and we have Nifty on the other exchange. We have currency futures, and we have commodity derivatives, gold futures. We have DRs, and we have various bonds which are listed here. Equity listing is something which has been enabled very recently, and very soon we'll have equity listing on the exchanges. So I thought since we are speaking to the Indian audience, we should also highlight what are the opportunities for resident Indians which are present in India through GIFT IFSC in terms of the outbound investment. So both the exchanges, they have different models. India International Exchange has a subsidiary which is called India INX Global Access. Through this subsidiary, they are having tie-ups with large international brokers, including Interactive, and they provide access to all the global exchanges. They have, I think, more than 150 exchanges, and you can trade on these stocks, whether it is US stocks or stocks in Europe, Singapore, and any other part of the world. So that trading can be enabled through India INX Global Access, multiple jurisdictions, several exchange traded products. The other exchange, they are having a different model. So they have a tie-up with HDFC as a custodian bank, and they convert selected US stocks. Right now, it is 50 US stocks into depository receipts, and those unsponsored DRs are traded on the NSE platform. So different models, but the objective is very similar. It provides access to Indian retail investors who can trade onto US stocks under the LRS of RBI. Coming to direct listing, which means listing of equity shares of Indian companies on the IFSC exchanges. And this is happening for the first time in the country. Previously, as you know, the Indian company, if they want to list on an international exchange, they had to list on NSE and BSE, and they were allowed to go only through the DR route, that is the depository receipts route. And we had various ADRs and GDRs listed. So we have around 10 to 15 ADRs on the US stock market, and various GDRs mainly in Luxembourg or London Stock Exchange. But if you see the journey of DR, it was long back when DR was very, very successful. But in the last few years, after the revision despite the revision of DR in 2014, there is hardly any demand for this route. So the government of India thought to allow directly listing of equity shares only on the international exchanges in GIFT City, and that's why we call it as direct listing. So I'll go into more detail. So Honorable Finance Minister, this was in July of last year. This was in an event which was organized by SEBI. Madam announced that the decision which was taken by Government of India to enable direct listing of listed as well as unlisted companies on the IFSC exchanges, which will be operationalized shortly, enabling startups and companies of like nature to access global markets. So this announcement was done in July 28, 2023. And after the announcement, so a working group was constituted by IFSC. We had market participants, we had representatives of government on the operational issues which will take place, particularly in the context of companies which will be listed on both the markets, so NSE, BSE, and our exchanges. So we studied various models, and based on the suggestions or recommendations of the report, the final notifications were notified in January of this year, where we have notifications under the FEMA direct listing scheme and the notifications under Companies Act, because Indian companies will be raising foreign capital. So both the notifications were issued on the same date, January 24, 2024, along with a detailed FAQ by the Government of India on direct listing of Indian companies on the IFSC exchanges. And we thought this is a good opportunity. Let us review our regulations. So we had a regulation in 2021, but we thought, let us make those amendments and make it easier for the companies to raise capital. We started the process of reviewing our regulations. So we have a standing committee on primary markets, which is chaired by Mr. Mohan Das Pai, and we have market experts, investment bankers, and exchanges, clearing corporations, and MIs in this committee. So the committee suggested that we review our regulations and benchmark our regulations with the practices in other parts of the world. So we compared with various other jurisdictions, and we issued a consultation paper, and our final regulations have been notified on August 29, 2024. So the direct listing scheme under FEMA India rules and the DEEP rules under Companies Act, and we have FAQs. Sorry. So first thing, it covers both the aspect, issue of new shares. When a company needs capital for their own use, they can use it for listing here. Otherwise, the opportunity which is now very important is if they want to provide an exit to the shareholders which are present in the company and they want to unlock value, so they can offer share for the public to subscribe, and that we normally call it as offer for sale. So an IPO can have a new capital raising or offer for sale. Both are covered in the direct listing scheme, and it covers both the aspect, unlisted as well as listed. But for the listed companies, we'll have to wait for some time because that will be duly regulated by SEBI and IFSC. And we are working with SEBI on the various amendments which are required in various regulations of SEBI. So for an Indian company which is doing an IPO here, the permissible shareholders will be only non-residents. So this is very clear in the direct listing scheme. It can be NRIs, FPIs, or other foreign investors, but not the resident Indians. So those are not permitted in the IPO of Indian companies. So since these are Indian companies, they will be governed by the FDI limits and the foreign portfolio limits which are there under the FEMA, which means if there are any sectoral limits that will continue to apply despite they are raising capital in international exchange, and those foreign limit of 10% for each that will continue to apply. Pricing, it will be through a book building process for an unlisted public company that is mandatory provided in the direct listing scheme itself. So considering the time, I will quickly go through some of the requirements in our regulations. So largely we have covered ISO principles, which is the standard setting body for securities market. And we have kept ease of doing business in mind in our new regulations. And our regulations allow both Indian and foreign issuers to raise capital. So we have requirements for IPOs, FPOs, SPACs, secondary listing, bond listing, and other financial products like CP and CD. And very soon we'll come out with a detailed circular on commercial paper and certificates of deposits. So eligibility criteria, there are 3 tests which we have kept into mind. The idea was to cover all types of companies, whether big or small, they should be able to raise capital. So either they have revenue of 20 million or profit of $1 million. In case they don't meet either the revenue test or the profit test, there is a third criteria, which is market capitalization, which is mainly for the smaller companies. In case the investors see value in those companies, even if it is a startup or an SME, they want to raise capital, they can raise it if the post-issue market cap is $25 million. And in terms of filing of offer document, what we have said it that for large IPOs, you file a offer document, you take observation letters and approval of IFSCA, so that is required. But in case of smaller IPOs, which is less than $50 million size, there is no need for taking the observation letter of IFSCA, the regulator. So you can just file the document with IFSCA, take in principle approval of the exchanges, and do a very quick IPO. The disclosures in offer document, it's largely principle based. So we have identified which are the important disclosures which are required to be done in the DRHP. Those things we have given in the regulations, but we have not gone into very detailed format for offer document. In terms of accounting standards, we have said IFRS or US GAAP or Ind AS. Since Indian companies, they can follow Ind AS accounting standards for making disclosures in the document. Offer timing, after the observation letter of IFSC, there is a timeline of 12 months, which is very similar to the domestic market. And offer period, we have given more flexibility. If the issuer is targeting very, of a small size, they can do it for 1 working day also, depending upon the company and the merchant banker. So offer can be open for 1 working day to 10 working days. So we have given large amount of flexibility in the regulations for the issuers to raise capital and do an IPO. And for pricing, we have given both the option, fixed price as well as book building. But as I mentioned, for an Indian company, they will have to comply with direct listing schemes. For those unlisted Indian companies, it is only book building. But for foreign issuers, it is a mix of both, which are permitted in the regulations. So this is something which is very important. As you may be knowing, one of the important requirements for an Indian company to do IPO, at least for the smaller Indian companies, the minimum public offer and minimum public shareholding is 25%. Here, what we have said, it is 10% for a foreign company. And since these requirements flow from SCRR, we requested Government of India to make it 10% even for Indian companies under the SCRR. And government has notified that for Indian company listing on IFSC exchanges, the minimum public offer will only be 10%. So this is particularly important for startups and SMEs. If they want to raise capital, they can retain control of the company by offering only 10% to the public and get the IPO done. And we don't have any requirement in terms of number of shareholders like 50 or 200 or which are there in the previous regulations. So as long as you're offering 10% to the public, and it can get the IPO done on the IFSC exchanges. The IPOs can be underwritten. Largely in other markets, most of the IPOs are underwritten. So we have permitted that in our regulation, subject to adequate disclosures. So anchor investors, it is permitted. Monetary agency, we have kept it optional. So in India, it is mandatory for any IPO of 100 crore or more. But here we have said you can choose to appoint a credit rating agency as a monetary agency in case you want, if you want to give more comfort to the investors. Otherwise, the normal disclosures on a quarterly basis will be there on use of proceeds, but it's not something which is mandatory. Again, lock-in is very important if a company wants to do an IPO. So we have said only for the promoters and the controlling shareholders, mainly in the context of foreign companies where they don't have the concept of promoters, the lock-in will be for 180 days and that's it. So other shareholders, they are free to buy and sell whenever they want after the IPO. So what are the advantages to the issuers? So for Indian issuers, so they get a large option in terms of the investors which they want to choose. If they want to get the fund from Indian investors, retail investors, they can go to the Indian markets. If they want a valuation from foreign investors, they can come here. So they have an expanded investor base and they can get better valuation if they want more money from the foreign investors present here. So in terms of the company, they can diversify. They can raise capital in INR through Indian markets. They can raise capital in terms of foreign currency in case they want to invest into foreign markets. So what this means is if a company, they are having some plans to make investments outside of India, they can raise US dollar, they can keep US dollar in IFSC, and then they can use the same US dollar for their investments. They need not convert US dollar to INR and back INR to US dollar. It provides an exit strategy for those investors who want to unlock value. So those PE investors, if they want to make an exit, they can quickly make an exit through IPO. From the investor perspective, some of the benefits are all the trading will happen in foreign currency, mostly US dollar. So they save a lot in terms of hedging those foreign risks, which normally foreign investors have if they invest into Indian markets. And our exchanges, they offer more than 20 hours trading in a day. So in fact, if you see India INX, they operate for, I think, 22 hours in a day, more than 22 hours in a day. And there are no tax implications on foreign investors in terms of capital gains, STT, GST. So it's a very attractive destination for attracting more and more foreign capital into the country. So additionally, I would like to mention that recently, based on our interactions with the issuers, we have seen a strong interest coming from some of the foreign issuers, which have been set up by Indian NRIs or persons of Indian origin. They are based in various parts of the world. Right now, we have 1/5 population of the world as Indians. So there are many Indians set up in Delaware, Singapore, or other countries where they have formed startups or large companies. They want to come back to India and do an IPO. So for those companies, even the retail Indians can participate under the LRS. Even the resident mutual funds can participate subject to the limit of RBI. So they have a large investor base in terms of the both residents as well as non-residents when it comes to the liquidity in the market. So this is something which we have seen, and currently if you see the startup ecosystem also, more than 50% of the Indian unicorn, they have having business in India, but they are having the structures formed outside of country, whether it is Singapore or Delaware or Mauritius. So it's a very good opportunity for those companies to come back to India, raise capital through GIFT IFSC. And they can raise capital through IFSC, and there is no need to reverse Philip in terms of structure. So they can have the presence, continue the presence in those jurisdictions and do an IPO on the IFSC exchanges. So I think we'll have very soon IPO of foreign companies on the IFSC exchanges. So these are some of the requirements post disclosures. I will not go into more detail, but there are sustainability reporting whistleblower mechanism which we have introduced in the new regulations. Listing of debt securities. This is something which it's very successful. So some of the reasons why it is very successful, we have aligned our requirements very similar to the global markets. So whether it is, mostly in London, Singapore, Luxembourg, we have transparent and simplified listing process. The fees are very less, and we have connectivity with the ICSDs, Euroclear, Clearstream, and DTCC for doing the settlements. And in fact, India INX, they're having a agreement with one of the largest exchanges in the world in terms of debt listing. They have an agreement with Luxembourg Stock Exchange. They are probably the leaders in the world in terms of debt listing of various bonds, including the green bonds. So as Vijayji was mentioning, so we have a framework for listing of green bonds. GSS plus we call it, green bonds, social bonds, sustainable bonds, and sustainability linked bonds. And these are aligned with global standards. So we have left it for the investors and the issuers to decide, subject to some globally recognized standards. For example, if it is aligned with ICMA principles or climate standards or European Union or Asian standards in terms of the taxonomy which they use, they can list those bonds here, and they have to make additional disclosures in terms of the use of proceeds. So pre-issue disclosures should be there in the offer document in terms of the objectives, the process which they will follow, the utilization of the proceeds, and the systems and procedures to track the deployment of funds. And after listing also, post-listing, they have some mandatory requirement in terms of annual disclosures of the use of proceeds and which all projects they have invested, and in terms of the impact which those bonds have created, both in terms of qualitative and quantitative terms. So these are some statistics. This is as on July, but right now we have already crossed $60 billion, and we have more than $13 billion in the ESG space. And I would like to highlight there are 2 social bonds which are listed on our exchanges. They were also presented as case studies in the G20 when we were chairing the G20 in terms of India. So under India's G20 presidency in 2023, Awas Financials and Sriram Transport, they were presented as case studies in terms of the social bonds which are listed on our platform. So with these, I will stop here to take questions and answers, and for any discussion on the various opportunities here.
Thank you so much, Arjun sir, for sharing insights and the regulatory frameworks which are there in GIFT IFSC. One question which has come through is, what is the minimum offering requirement for a foreign company coming up with the IPO in GIFT IFSC?
So here what we have said that in terms of the minimum offer, it is 10% of the market cap. So once you offer 10%, that is sufficient. So we don't have any number as such in mind, but it should be 10% of the capital. If you offer to the public, that should be fine.
The second question which we have is, can Indian insurance companies invest in IPO of foreign company in the GIFT IFSC?
So this is actually an interesting question. So since if it is a question about insurance companies, they are regulated by various regulators. So one is FEMA allowing it, second is the IRDA allowing it. So in case IRDA doesn't allow, such insurance companies will not be able to invest outside of India. So it's not about our laws or FEMA, it's about IRDA also. And if I'm not wrong, IRDA, there are some restrictions by IRDA in terms of the investments where an insurance company can make. And currently, those insurance companies are not permitted to invest outside of India. So they will not be able to invest in the IPOs, even if it is a foreign company listed here.
Thank you so much, sir, for answering the questions. I'll now leave
But
floor
just to
open.
clarify, if it is specifically on insurance companies, they will not be allowed. But other than insurance companies, if it is a resident entity, they can invest subject to FEMA allowing it. For example, resident Indians, they can do under LRS for an IPO in a foreign company. If it is a mutual fund, they can do investments in the foreign company doing an IPO here, subject to FEMA limits.
All right, sir. Thank you. I'll now keep the floor open for the questions from the participants. So if anyone is having any question, they can unmute themselves and ask the question. Our expert speaker is here. All right, sir. I would like, on behalf of India International Exchange, I would like to thank IFSCA and Arjun sir for sharing critical insights on the direct listing and the entire ecosystem of GIFT IFSC. I would also like to thank our partners MFIN for collaborating with us on this informative session, and we look forward to collaborating with you all in future as well. So with that, we'll take a leave and wish you a very
Just
good
wanted to add one thing, Vijay here. Sorry, wanted to add one thing. Maybe you may not have questions immediately right now, but you will have our contact details, so you can reach out to Priyanka from our team, and you can write into her, or you can call her and ask any questions that you have. And if there is anything that we need to get clarity on the questions from IFSCA, we will also bounce it off with them and get it, and we will ensure that all your queries are resolved. So please feel free to reach out to us. So Priyanka can be reached out on her on her phones as well as through email. Yeah, I just thought I should leave this thought behind.
Thank you, sir. And in case MFIN partners have any questions, like their members, they can reach out to Shrija, and Shrija, you can, put forward the query to us, and we'll make sure we answer all the queries of your partner as well. So thank you so much for your time, everyone, and we wish you a very good evening.
Thank you. Thank you.
Thank you.
Thank you.